Hi, folks. Two updates for you this week. First, we'll touch on some recent investment changes, and then we'll dive into the recent tax law changes that were brought about in the One Big Beautiful Bill passed on July 4th. Looking at retirement type accounts, IRAs, Roth IRAs, last week we would have seen two investment changes focusing on international stocks and industrial stocks. Think GE and Caterpillar. These changes were simply to make sure that you own the highest demand sectors of the economy. Looking back out to the tax bill, the One Big Beautiful Bill, or OBBB, the bill was passed on July 4th. The main thrust of this bill was to make permanent the 2017 tax bracket changes. And that has been accomplished, so it will take an act of Congress to either raise or decrease the current tax brackets that are in place. We have a team of CPAs going through this new tax bill line by line, and we're working on integrating that into our tax projections for this year as we speak. But I did want to give you at least a couple of takeaways that we saw from an initial read of the tax bill. And I think the major thrust that most taxpayers are going to see from this passage of this bill is going to be a reduction to your amount owed in 2025 forward. And I'll go through a couple of the details in the bill now to show you how they're accomplishing this tax reduction or this tax decrease. Something that's going to affect every taxpayer is an increased standard deduction, a small increase, but still an increase. But for folks who are age 65 or above, it is a marked change. Folks who are 65 and above currently, under the previous tax law, even received an additional standard deduction. The OBBB almost doubles that additional standard deduction for folks age 65 and above. This is a bit of a nod to the No Tax on Social Security campaign slogan that the Trump campaign was running with. For folks in high tax states, if you were impacted by what is called SALT or state and local tax deduction limitations, good news. The previous $10,000 cap has been changed to $40,000. Something that has caught our eye, particularly for folks who are charitably inclined, is a new what's called an above the line deduction for charitable contributions up to $2,000 for married couples. Previously, if you gave a charity $2,000, you would not receive any tax benefit from that donation. Now, that same donation will receive a tax deduction, and it doesn't require you to itemize. So this is something that we'll touch on a little bit more as the year goes on. Finally, for folks who are planning any type of solar or clean energy projects for their home, 2025 is going to be the year that you want to complete that project. Previously, there was a 30% tax credit for solar installations and other residential clean energy projects. That 30% tax credit is going away at the end of 2025. So if you've had one of these projects in mind, now is going to be the year to do it. Otherwise, you're going to lose that tax credit beginning in 2026. This is very much an initial read of the bill. We're still going through all the various provisions and integrating this into the tax projection software we use to make sure it'll be ready when we get together later in the year. But of course, if you have any questions, please feel free to let us know. Bye now.